Welcome back. I'm Miles from Swan Investing, the home of making 100% returns on your investments while sleeping well at night. Yeah, I've been involved with financial markets and investing since the late 90s. Everything I teach is earned or learned through experience, and I've made plenty of mistakes in the past, which is great for you because you can learn from these without making mistakes that I did. In this video, I'm going to share with you the one stock that I believe that everyone should buy, whether you're just starting out and very little, or whether you need to pay off debts or are experienced and have wealth. I'm also going to tell you why this won't get you to financial freedom anytime soon. So at the end of the video, I'll tell you what I did in addition to become financially free in less than 10 years. So let's get straight to it. So the one stock that I've had at the core of my investments for the last 20 years is an S&P 500 ETF. Now ETF stands for Exchange Traded Fund. And when you buy a share in an ETF, you buy a share in a fund that replicates the performance of an index. Now there's a lot of these on the market, but the one that I have had is the one that replicates the S&P 500 index. So the S&P 500 index is the top 500 stocks in the US market, which is about 80% of the entire US equities market. And that is about 60% of the entire developed world's equity market. So with one share, you are owning 80% of the US equities, which is about 60% of the developed world's equities. Now, what I like about this ETF is that the fees are negligible, less than 0.1% per annum. And the index has had an annualized return of 13.5% over the last 10 years. And you can put this on autopilot every month into your tax-advantaged account in the UK, whether it's your ISA or SIP, or in the US, the Roth or a 401k. So what are you actually investing in? Well, about 30% of your investment in these ETFs is tracking the top 10 companies in the US. So that will be your Amazons, your Apple, Google, Johnson & Johnson, etc. But you have the benefit that your investment is also diversified in case one of these stocks underperformed. And the strategy has proven to be very effective, as historically the US stock market goes up 70% of years. So which particular ETFs? So I've invested in two, the iShares CSP1 and the Vanguard VUAG. Now these particular funds accumulate dividends and are denominated in pounds, but they exist as variants if you want to distribute the divvies or denominate in US dollars. So it's very easy and absolutely everyone can and should do this. By the way, I also use a developed world ETF, which tracks the top 85% of equities in the 23 developed markets, so in addition to the US. But the S&P 500 ETF is my core holding. So do check the disclaimer under the video before investing. And if you do want more info on how to do this, just drop me a message and I'll be very happy to help. So that's the good news. The bad news is that you're not beating the market. By definition, you are buying the market, and you have to wait about 30 years to reach financial freedom if you do nothing but buy the market. Now, over 30 years is still a very long time in my book, and so on its own, I call this the one-day strategy. You do get to financial freedom, but only one day. Now, many people don't realize this, and numbers don't lie, so I'm going to head over to thecalculatorsite.com and just show you how long it takes. Okay, we're going to assume a £40,000 gross income investor with a financial freedom number of a tax-free £30,000 a year. Now, we've got to adjust that for inflation, and my rule of thumb for low rates of return and low inflation is that you need to save 25 times the tax-free number to be able to draw down without running out of money. So 25 times the 30,000 is 750,000. So we're going to see how long it takes to get to that 750,000. So now interest rate. Now the last 10 years of the S&P 500 performance may not be representative of all the future performance. So let's take the long-term historical average, which is actually 9%. We're going to run this out for 35 years. Now, the savings rate. So for our £40,000 a year investor, let's assume a 10% savings rate. So that's £4,000 a year, which is £333 a month. And let's run that out. Okay, so we've got the £4,000 a year savings rate, we've got the build up in the savings pot on the right, and the interest at 9% here. So let's go down and find out how long it takes to get the £750,000 necessary. And here we have the 750-ish, and it's 34 years. And you'll note that the £30,000 a year financial freedom number becomes an inflation-adjusted 60,000 in 34 years' time. So, if you're like me, you want your money to work for you and not the other way around. 34 years is a very long time. So let's have a look at what the same investor would need to become financially free in, say, 10 years. So, if we take the 9% interest rate and we increase that to, say, 35%, and run that out, we're going to reduce the savings rate to, say, half the investor's savings are going to go towards this higher interest rate investment, so that half of that is then 166 a month. And we'll run that out. And so let's have a look now. When we get a bit over the £30,000 a year financial freedom number, and we don't have to worry about inflation so much now because we're only looking, say, 10 years out. And what you see is that it takes 11 years, and that at a 35% interest rate, you only need £130,000 of build up of the savings pot. So, in summary, with an investment of 35% or over, that needs to be consistent year on year, you can reach your financial freedom number in just around 10 years. This is where everyone says, Miles, that sounds great. How are you going to do that? How can you consistently make over 35% return on stocks? Well, how about dividend investing like Warren Buffett? Well, the answer is no. In fact, his fund is just too large these days, and it's actually underperformed the market over the last 10 years. Well, what about hedge funds? Well, yes, the best hedge funds do make 35% returns, but the minimum investment levels can be 6 to 7 figures, which is far too much for most of us. And the poorer ones also make very big losses. Well, what about day trading, contract for differences, options, these sorts of things? Well, yes, you can make over 35% on a good day or a good year, but not consistently in my experience. So what about the wealth of internet stock tips that are out there now? The answer there is no. By the time you pick up the news, thousands have done so before you, and you get spiked, which means by the time you buy, others are selling, and you're going to lose on the sell-off. So there's truly only one strategy that consistently works, and that is stock picking. However, you do need a lot of experience, or training from somebody with a lot of experience, and a proven system to be consistent. And that is what I've done with the system I developed 10 years ago. Others have got systems, but the one I have is called the Swan 100% strategy. And the key secret in my system is that stocks with an eye-popping success case that would 10x the value of the company will go up by 100% before major news with a near certainty. Now, obviously, the screening criteria and the system is a bit more involved than that, and I will reveal all the secrets in the future, so stay tuned to this channel. So this has given me financial freedom through Swan Investing, and I've been coaching others on it for some years now. So if you're interested to learn all my secrets, subscribe below. And if you like what I'm doing to try and be of service to investors who want more from their money and sooner, please also hit like. Feel free to comment or add questions below too, and I'll answer them within 48 hours. There are also some links below where you can find out about my courses, my coaching, and what else I've got going on.